Hi, everyone, and welcome to this new webinar. I'd like, first of all, to welcome all of you. Thank you for joining us. Today, I'll be um, covering a very important topic regarding making money. Now, for those who are just starting in the FX market, starting like discovering this journey or this way of making money, after understanding the concepts or the basics of the FX market, we need to understand how we can make money. Now, we have the platform MT5, and this platform is simply a way that can help us to see what's on the chart, what's happening in the market very clearly. We are able to watch um, pairs, currency pairs, our account history, and everything related to this. Now, when it comes to reading what's on the chart, now, as I told you before, that it's all about making money, right? So um, we don't want to spend a hard time finding a way um, to help us to make money because we already have a very easy way. Maybe it takes time so that you are able to perfect it. But after this will simply pay. So let's put it this way. Technical analysis is simply a method or a way that can help you to understand what's happening in the market very easily. So technical analysis is simply the study of prices movement in the past. So we are able to uh, know what's going to happen in the future. Now, we're going to use the past plus the present, so we have the future. So what we're going to do is that we're going to be looking for like previous data, financial data, as it is, and regardless of looking into the reasons behind it in order to know what's going to happen in the future. So it's not about why the market moved this way. We don't care why the market moved this way. This is something that we don't care about. The only thing that we care about is that what we have now. So we simply have the market moving this way, and previously the market was moving in a certain way. So based on this, we are able to expect what's going to happen in the future. So it goes this way: uh, past plus present means this means the future. So the future direction based on these two things. Technical analysis, first of all, depends on three main concepts. Um, uh, and I believe they're going to be like this. So let me just write them down for you so you can see everything clearly. Um, First of all, we have here um, price moves in trends. And we also have history repeats itself. And the last thing is market action. Market actions, discounts, everything. So just three main concepts that we have here. Okay, guys? So this is simply how it works. Now I'm going to explain this in a minute, but first of all, as I told you, we have price moves and trends, history repeats itself, market actions, okay, discount everything. So three main concepts that we must rely on when it comes to technical analysis. So first of all, again, the definition of technical analysis, it's simply the study of the movement of the market and the chart, maybe the chart or the candles or whatever that you have on the chart, in order to be able to anticipate or predict what's going to happen in the market in the future. Okay, so the past plus present simply can help us to expect the future movement of the market. Okay. So this is simply how it works. So first of all, prices or price moves and trends. What does it mean? This means that if you see on the chart any kind of trends, let me share this with you. Now look at the chart. It is not one direction. So everyone can understand this. It is not one direction. The market moves in three main directions. Maybe one of them in a certain period of time, then another one, then another one. So the market, for instance, is going upwards, then going sideways, then to the downside. So we have three main directions: up, uptrend, sideways, and downtrend. Three main directions. Okay. So this is simply, guys, how it works. So this means that although the price movement appears on the short term like a random movement, but such movement has a certain direction that is either upward or downward, sometimes sideways. A currency pair rate may raise, then go to the downside a little bit, then go back to raising quickly, and then could fall slightly, and so on and so forth. So it's all about understanding that the market does not move in one direction. There is no such a thing as one direction in the market. The market has three directions. The market, I mean, the price on the chart could seem to be like as if it is a random movement. It is not a random movement. It is something that simply has a reason behind it. I mean, behind the movement of the market, there is always a reason. There is something that is happening. We don't. I mean, technical analysis is not about understanding or being aware of the fact that there is something that is happening. So you don't need to know the reason. Actually, you don't really need to understand the reason. It's all about understanding the movement of the market on the chart so you are able to expect the future movement of the market. Okay, guys, so this is simply how it works. The webinar today, as I told you before, that it is going to be like an introduction to technical analysis. I'm not going to explain other tools or something like this. I'm just trying today to make it as easy as possible to try to deliver um, my webinar today in a very easy way, as you could say that this is it's all about the definition of technical analysis. Okay. So this is simply how it works. The second thing that we have, so before I finish this part again, quickly, we have an uptrend, sideways movement, a downtrend, nothing more than this. Now, our mission is to try to expect the beginning of an emerging trend. So we are able to start or to enter the market from as early as possible. So we are able to gain as much profit as we can. So first of all, maybe we have an uptrend here. So if we enter the market here, buy here, this is going to be an early stage of entering the market, and this is going to be a great area. So you can simply maximize your profitability. Sideways movement, most of the time this would not work. I mean, you don't wait for too much from the sideways movement. Maybe the downtrend would be okay. You can sell, short selling from here, and if the market goes as you expect, you are making money. You know what I'm saying? This is simply how it works. Uh, okay. So I'm gonna move now to the second concept of technical analysis. That is, history repeats itself. Now, this is how it works. What happened in the past, so this is the past. What happened in the past might happen again in the future if the same factors that caused it in the past happen again in the present. So here is the present, for instance. What happened here, if this happens here, this is going to happen in the future. As easy as this. Okay. You must keep this in mind. History repeats itself is one of our main concepts that technical analysis is relying on. Really important. Okay. So history repeats itself is our second concept. The last thing here is market actions discount everything. This simply means that everything that you need is on the chart. Everything that you need is on the chart. That's it. To begin with, I'm going to start with something that is called trends. So I'm going to start from this concept, price moves and trends. Okay. Based on this concept, we must understand that trends is something that is, I mean, trends are very, very important in the FX market. So there is trend tendency that we must understand. Okay, what are the trends? We have three trends. uptrend, downtrend, and we have something else that is called sideways. This is not considered to be a trend, it's a movement. The market is moving sideways. So three main things. Before I carry on, we must understand that an uptrend simply means that the currency rate tends to raise slowly. Downtrend is simply the opposite, means that currency pair, that this currency rate tends to drop slowly. On the other hand, sideways simply means that the currency rate tends to be close to a certain price. Okay, so buyers and sellers are fighting in this sideways. Now, when we have an uptrend, this means that buyers are more than sellers, so the market is simply appreciating. Downtrend simply means that the market is going downwards. Sellers are more than buyers, so the market is going downwards. Sideways simply means that the two powers, we could say they are equal. So nobody is winning the fight. Okay, guys? This is simply how it works. Okay, so now before I carry on, there are two things that I must clarify. There is something that is called peak, and there is something else that is called trough. This could also be called low. This is also called high. Okay, so trough is simply something that looks like this. An inverted, okay, it's a V shape. Now this part is the low or the trough. And as for this one, this part, it's an inverted V shape, is called peak. Okay. So an uptrend is simply, I mean, those two things are cornerstones. They are simply the components of any trend that you can see on the chart. So if we have an uptrend, it's simply a series of peaks and troughs that are going upwards. So it's going to be something that looks like this. Look at this. A series of peaks and troughs that are going upwards like this. A downtrend is simply the opposite, a series of peaks and troughs that are going downwards. Sideways, it is sideways, just like this. See? Just like this. So a series of peaks and troughs that are going downwards, a series of peaks and troughs that are going upwards, and sideways is simply when peaks and troughs, I mean, the rate of a currency pair um, is close to a certain price, very close to a certain price. It moves around it, ups and downs around it. Okay. So, do you have any questions on this? Okay. Now, this is where we can start the real practicing. Now, as I told you that there is something that is called trend, right? And we have up trend, we have down trend, right? Now, there is something that we're going to do right now, a very small thing that we're going to do. An uptrend, we're going to add here line. A downtrend, we're going to add here line as well. Now, this is where we can trade. Knowing that there is a trend in the market doesn't mean that you are able to trade, but knowing that there is a line, you're able to trade. Okay. So we have an uptrend line, a downtrend line. An uptrend line simply is something that is drawn below the troughs. As I told you, we have peaks and troughs. An uptrend line is simply something that looks like this. So we're going to connect these points. It's a line that connects at least 2 points, 2 troughs together. And you can trade starting from the third touch. So here I can enter the market here. When the market reaches this area for the third time, I can go long here. I can buy here. A downtrend line is simply the opposite. It is drawn above the peaks. This means that peaks are going downwards. So at least 2 peaks, a line that connects at least 2 peaks. And starting from the third peak, you can go short here. Here you can go short, here you can go long. Okay. As easy as this. So a trend line is simply a station that enables you to determine the direction and to better understand what's happening in the market, and to better figure out the best places or areas to buy or sell. Okay. So in case of the bullish trend, just like this one, we rely too much on the uptrend line. So we're gonna here we're going to spot 2 points, 2 lows, 2 lower highs, higher lows, sorry. And based on this, you can draw a line and then you can trade when the market does touch the line for the third time. And the same goes for the downtrend line. If you have a downtrend line, the market goes downwards. So you're gonna try to spot 2 peaks, 2 lower highs, and you connect them together. And then starting from the third touch, you can go short. Just as easy as this. You know what I'm saying? Okay, so do you have any questions? Okay, so today I'm going to just stop here. Let me show you some practical examples on this. So first of all, I'm gonna I start to here like spot some trend lines. There's a tool here that is called draw trend line. So I'm gonna start from this point. Maybe now it doesn't work. Maybe from this point, the lowest point here. This could be done on any time frame. So here, as you can see. So here the same concept, guys. So here, 1, 2. So from the third touch here, I can go long, right? As we discussed before. So starting from the third touch, I can go long, right? As for a downtrend line, let me spot one for you. Maybe this one. No, not this one. Let me see if we have something else. Okay, maybe this one would be okay. Look at this. The market is touching this area. 1, 1, 2, and here's the third time. And once it did touch it, the market went downwards. Just as easy as this. Okay, so that's it for today. I hope that you have enjoyed the webinar of today. Stay tuned for our upcoming webinar. We're going to continue with support and resistance levels. So this is going to be a very important part as well of our journey to understand and to make money from the FX market. First of all, this is what it takes. Um, um, Knowledge is very important when it comes to making money. The more knowledge you have, the more money you can make from the FX market. So that's it for today, guys. Good evening. Stay tuned for our upcoming webinar and bye for now.